Hi traders, Elite Currency, this is Chris speaking, and today's video is on 5 key tips for trading breakouts. Of course, here we're trying to avoid false breakouts and only try to trade the good breakouts. So how do we know if it's a good or false breakout? Well, our tip number 1 is adjust the roadmap and understand patterns. Patterns, very powerful and important concept in trading the markets, specifically Forex market, but others as well. And here you can see a couple of those examples. Bear flags, wedges, ranges. If you're able to see and recognize them, you'll be able to understand what is the most likely path of least resistance for price. What does that mean? Which direction is price likely to go? Very simply put. So if we have momentum down and we have a bear flag, a break of that bear flag indicates momentum down, as you can see on the pound dollar earlier this week. So this is a very recent chart. This is just from the pound, basically this week. So up to Friday, and you can see how powerful those patterns really are. And you can use them to understand the markets in more depth. Tip 2, wait for strong candlesticks within the breakout. So if we see a breakout, if we see a flag, for instance, and here you see a couple of those orange lines indicating some corrections. How do you know when the pattern is really broken? Well, we can use candlesticks. We can wait for candlestick closes near the high, in this case for bullish breakout, or near the low for a bearish breakout. If the close is near the high, that's signaling strength. That means that the bulls or bears are in control, and that means that the breakout is probably going to work out fine. You can even zoom in one higher time frame to make sure that that candle is looking fine. Then the breakout is even stronger. Or you can use the same time frame, but then of course it's okay, but not as strong as the time frame higher. So you want to check maybe both. If there's no strong candle close, right? If there's a big wick on top, let's say here there's a big wick, or here there's a big wick, and with big wick I mean more than 30% of the top, right? If it's 50% of the candle's wick on top in a bullish breakout, that is not a good signal, and that could become a false breakout. It doesn't have to necessarily, by the way, but could. Tip number 3, trade the break of the break. My favorite here, in fact. And basically, we're looking for a good breakout. Same thing like looking for a good candle close on the breakout time frame. But then zoom in one time frame lower. So, for instance, instead of looking at, this is a 5-minute chart. So, for instance, the breakout occurred on the hourly chart or 30-minute chart. And then I zoom in to the 5-minute chart. You can see the blue horizontal line indicating when the breakout candle confirmed. Then looking for a new pattern on the lower time frame, like this bull flag on the 5-minute chart. When there is a new pattern on the lower time frame, that signals that price is correcting and setting itself up for a continuation. If there's no pattern and the market flies down like this, right, then that is probably a false break. But if it makes a pattern and it corrects and it looks corrective, then it's setting itself up for continuation. That's one way as well to gauge, to understand the sentiment that's going on a lower time frame, to understand if there is a continuation or if it's a false break. So in this case, the entry zone will be in the purple box after the break of the pattern on the lower time frame. Tip number 4, use trend lines, moving averages, and the Admin Markets Keltner indicator. Great tool there. And basically, it's just perfect for finding setups. Here, for instance, we see trend lines that are broken. That's perfectly fine. And here we see an example of our SWOT system chart, right? And you can see the breakouts of these flags, these orange lines indicating the flags. And when we get a break, there is a blue arrow and a blue candle indicating the bullish breakout. So it simplifies kind of the manual work that otherwise has to be done just by automated signals based on moving averages, and you can see that they work fine with trend lines too. So that makes it easier for breakout traders, is for instance using our SWOT system. Tip number 5, candle close and body above the support and resistance. So yes, some candles are better than others. This one, for instance, where I have the red dot here when I'm showing with my cursor, is not that great. It's okay. It's a good candle close, but the body of the candle is still about half or more than half within the correction, right? This candle is fully above it. This candle is a bit better because it has at least half the candle above it. So the more candle above it, right, the more body above it, the better it is, above the support resistance for upside or below for downside. All right, that was a quick video from us. Thanks. I hope that you enjoyed that. Of course, more free material on elitecurrency.com. You can check out This Is How You Write It. And if you like this, please share, like, and subscribe. Thank you so much. Wish you all great trading. Cheers.